Hello everyone and welcome to my next NAP. NAP stands for Nonprofit Auditor Points and I'm Irina Ryshkova, your nonprofit auditor. I designed these NAPs to help nonprofit community to better understand accounting standards and understand GAAP. And we continue our series regarding revenue recognition for nonprofits. We did discuss in the previous episodes that there's two separate standards that used for revenue recognition for nonprofits. Specifically, the standard for exchange transactions, it's 606, where we recognize revenue when services are delivered. So it's performance obligations. MAP, we do recognize revenue. And the second type of revenue is contributions. Same, we combine under term of contributions, we combine gifts, pledges, bequests, donations, grants, they all under one term contributions, and revenue recognition is under standard is 958, and we recognize revenue for contributions when it's unconditionally promised. We discussed what constitute the promise, that it's different from intent. We also discussed what conditions means. We discussed the condition has two prongs, barrier and right of return the funds. And we also talked about multi-year grants, that they are, if they are unconditional, we do recognize the full amount right away. And in the last episode, we introduced the distinction between contributions with donor restrictions and without donor restrictions. And we discussed that restrictions only affect classification. They do not affect revenue recognition. So regardless whether funds with donor restrictions or no donor restrictions, they always recognize as revenue as soon as they unconditionally promised. And today we're going to go level deeper and talk specifically about two types of donor restrictions. Again, restrictions can only come from donors, not from the board members, not somebody's internal organization. Only donor who gives funds can put a restriction. And restrictions comes in two flavors: time restrictions and purpose restrictions. And based on my experience, a lot of nonprofits understand quite well purpose restriction and very often overlook time restriction. So why this is important, because misunderstanding of these two can lead to incorrect financial reporting and not being in compliance with the donor restrictions. Let's start with time restrictions. A time restriction exists when a donor specifies that the funds must be used in some future period. So the donor needs to specify that the funds must be used in some future period. So let me give you a very simple example. In December 2025, a donor gives to your organization $100,000 and indicates that it needs to be spent or used in operation in 2026. And so there is no barriers, there is no condition, there is no right of return the funds, so it's unconditional promise. So we recognize the full amount, $100,000, in December 2025 because that's when it was unconditionally promised. But because donors specifically restricted that these funds needs to be used in 2026, the donor did not say 27, 28, 29, they specifically indicated 2026. We classified it as restricted with donor restriction, and it will be restricted until it's spent in 2026. Revenue is recognized immediately, but classification will be with donor restriction. And at the end of 2025, because we're not in 2026 yet, the full amount, $100,000, will be restricted by time. Again, it does not affect revenue recognition. So then when 2026 begins and the organization uses the funds for operation, the time restriction will be satisfied, and at the end of 2026, the funds will be no longer restricted. They will be moved from net assets with donor restrictions to net assets without donor restrictions. Let's talk more about release entries. And we will talk more about release entries in the future episodes. But for now, just understand that the time restrictions are about when funds gonna be used, not revenue recognition. Okay, so that was time restricted. The second flavor is purpose restricted. So if time restrictions are telling nonprofit when funds can be used, purpose restrictions demanding a nonprofit to follow how funds will be used. For example, donor might say this gift or grant must be used for your legacy program. So it appears that nonprofit has more than just one program, and donor is asking use only for legacy program and not used for general administrative purposes, not for fundraising, not for anything else, but specifically for legacy program. Another example, donor can say this grant is restricted for capital improvements. So what the donor is saying, hey, you cannot spend the money to running your daily program activity or your management and fundraising activity. You need to buy some sort of capital improvements. Could be if you're building a building or in maybe tables, chairs, some sort of capital assets. Or it can say contributions must support scholarships. So it means that the funds needs to be used only for scholarships. Again, if the grant letter does not have any barriers, right of return funds, meaning it's unconditional, so we will recognize revenue immediately, but we need to follow donor wishes, restrictions, and classify the funds as with donor restrictions, and it will be restricted by purpose, depends on whatever purpose donor is requesting. Now that's where most people get confused. They think because money cannot be spent freely, it should not be recognized as revenue. And that's not correct. Again, we need to remember the standard 958. It says revenue recognized when it's unconditionally promised, regardless of restriction or not restriction. But if there is no condition and it's promised, then you do recognize. So classification is based on whether donor imposes restriction, where you put with restrictions or without the donor restrictions. So purpose restrictions are different from contribution. That's really important to remember. A purpose restriction says how funds must be used. A condition says that your nonprofit is not entitled to funds unless something is achieved, something extra needs to be done in order for your nonprofit to be entitled of the funds. While a restriction saying, hey, you are entitled of these funds, they're yours, but you need to spend it in specific way. So either time restricted or purpose restricted. So why it is very critical to understand conditions and restrictions? Because when we look at financial statements, specifically statement of activities, or even balance sheet, statement of financial position, and see large balance in the with donor restrictions, we need to understand what that represents. It might represent that funds restricted for next year operations. So, meaning that we have funds available for next year operations. Maybe it's a time restricted or purpose restricted. Or maybe funds restricted for specific purpose, project, one project or another project. Sometimes you might have substantial amount in net assets, but they all restricted either by time or by purpose, and they might not be available for whatever organization wants to do next year or this year. Overall, nonprofits typically prefer to have net assets without the donor restrictions because these funds are available for any type of expenses at any period as long as it's within the organization mission. So the key is understanding what portion of your net assets is flexible and what portion is restricted. And if it's restricted, how is it restricted? Is it restricted by time? Then you know over time restrictions will be lifted. But if it's restricted by purpose, you need to see if you actually meet that restriction. If your board decides to allocate money to the building project or to scholarships or whatever reason, these money do not become restricted. We call them designated. And if the board designated some funds, they typically designate them from net assets without the donor restrictions. But because board designates them, they can easily undesignate them. Again, restriction, either time or purpose, can come only from donor and nobody else. And if nonprofit would like to change restriction, nonprofit needs to go back to a donor and ask the donor permission to change the restriction. And it needs to be done in writing. Let's summarize today's episode. Time restrictions limits when funds can be used. That's time. Purpose restriction limits how funds can be used. Both time restricted funds and purpose restricted funds recognized as revenue immediately as they become unconditional promises. So the full amount is recognized immediately. Both are classified as net assets with donor restrictions, time and purpose, the same group with donor restrictions, and neither delay revenue recognition. Thus have no effect on revenue recognition. In the next episode, we will gonna talk about what happens when restrictions are satisfied and how properly release from restrictions and how it's present on financials. Thank you so much for being here today. Hopefully you learned something and enjoyed that information. Thank you, and I'm looking forward to see you next time. Have a wonderful day.